Every year, hundreds of companies enter the stock market. Each one promises growth. Each one dreams of becoming the next big success. But only a few manage to capture the attention of an entire nation. Recently, one name dominated headlines across India: SBI Funds Management. Within hours, millions of investors were talking about it. Financial news channels covered every update. Social media exploded with opinions, and thousands of people kept asking the same question: should I invest? But here's something even more interesting. Most people never read the company's complete financial report. Many didn't fully understand how the business actually worked. Yet, they were still ready to invest. Why? Was it because of the numbers? Or was it because of something far more powerful? Trust. Think about it. How does a company convince millions of people to hand over their hard-earned money? Not for a product they can touch, not for a service they can immediately use, but for a promise about the future. That is the real story, because this isn't just another IPO. It's the story of how reputation, brand power, and decades of credibility can become one of the most valuable assets a business will ever own. So what exactly is SBI Funds Management? How does this company make money? Why did millions of investors trust it? And what can every business learn from this extraordinary success? Let's uncover the story from the very beginning.
Here's something surprising. Before this IPO, most Indians had never even heard the name SBI Funds Management, but they had definitely heard of SBI. And that's exactly what made the difference. For decades, SBI has been more than just a bank. For millions of Indians, it's the first bank account, the first salary account, the first fixed deposit, the first home loan, a name that generations have trusted with their money. So when investors saw the words SBI Funds Management, many didn't start by asking, how does this business work? They started with a different question. If it's SBI, can I trust it? And that's the power of a brand. Sometimes, people don't invest in a company first. They invest in the confidence that the name has built over decades. But what exactly does SBI Funds Management do? How can a company that doesn't manufacture a single product become worth thousands of crores? So, why were so many people interested in this IPO? The answer isn't just SBI. It's what has changed in India over the last few years. There was a time when most people believed the safest place for their money was a savings account or a fixed deposit. The stock market felt risky. Mutual funds sounded complicated, and investing was something only experts were supposed to understand. But slowly, that started to change. People began learning through YouTube. Financial creators made investing easier to understand. Apps made opening an investment account possible in just a few minutes. And every month, more and more people started investing through SIPs. Today, young professionals invest from their very first salary. Parents invest for their children's education. Families invest for retirement. Even in smaller cities, people who once avoided the stock market are now investing through mutual funds. This wasn't a sudden change. It happened one investor, one SIP, and one decision at a time. As more people trusted mutual funds, the companies managing those investments became more valuable. And that's exactly where SBI Funds Management stood. It wasn't just managing money. It was managing the savings and dreams of millions of Indians. So when its IPO was announced, people didn't see it as just another company coming to the stock market. They saw a chance to become a part of one of India's fastest-growing financial businesses. But there's one question that most people never ask. If the company is investing other people's money, where does its own profit come from? How does SBI Funds Management actually make money? That's the business most people never see. So, how does SBI Funds Management actually make money? Most people think a mutual fund company earns money only when the stock market goes up. But that's not how this business works. When you invest in a mutual fund, your money is pooled together with investments from millions of other people. That money is then managed by professionals. Research analysts study companies. Fund managers decide where to invest. Risk teams continuously monitor the portfolio. Every investment decision is backed by research, data, and experience. Managing all of this requires people, technology, and constant analysis. And that's exactly what SBI Funds Management provides. In return, the company charges a small management fee for managing investors' money. It's only a tiny percentage of the total assets under management. But when millions of people invest, those small fees add up. As more investors join, and existing investors continue investing through SIPs, the total assets under management keep growing. And as those assets grow, the company's revenue grows with them. That's why, in the asset management business, long-term trust is far more valuable than short-term market movements. The goal isn't simply to sell a product. It's to earn enough confidence that people continue trusting you with their money for years. And that's exactly what helped SBI Funds Management become one of India's largest asset management companies. But if the business was already growing if SBI Funds Management was already one of India's biggest asset management companies, why did it choose to launch an IPO? At first glance, it might seem like the company needed money, but that's not what happened. This IPO was structured as an offer for sale, which means no new shares were created. Instead, the existing shareholders, State Bank of India and its global partner, Amundi, sold a portion of the shares they already owned. The money raised from the IPO didn't go to SBI Funds Management. It went directly to the shareholders selling their stake. This is one of the biggest misconceptions about IPOs. People often assume every company comes to the stock market to raise capital. But that's not always true. Sometimes, a successful business simply reaches a stage where its existing owners decide to unlock part of the value they've created. At the same time, listing on the stock market gives millions of public investors an opportunity to become shareholders in that business. For the first time, retail investors could own a part of one of India's largest asset management companies. But becoming a listed company also brings new responsibilities. From that day onward, every quarterly result, every business decision, and every future plan would be closely watched by the market. So, how did investors respond after the listing? And has SBI Funds Management lived up to those expectations? Let's find out. So, has SBI Funds Management lived up to the expectations? The answer depends on how you look at it. Share prices may rise and fall. Markets will always change. But a strong business is built over years, not in a single trading session. SBI Funds Management continues to be one of India's leading asset management companies, managing the investments of millions of people across the country. And perhaps, that's the biggest lesson from this IPO. Never invest because of headlines. Never invest because everyone else is investing. Understand the business. Understand how it earns money. And only then decide whether it's worth becoming a part of. Thank you for watching. This is Marketing and More, created by Surbi Gupta. See you in the next documentary.